Hey guys, Steven here, aka the Boiler Master. I just sat down with a cup of coffee, dig into some more DD. I want to go over an update we got from IQSTEL this week. As you guys know, I've done a lot of research on this company, and sometimes I pick up on things in these press releases that some of you guys might have overlooked. So I want to cover that filing and share my opinion, some of my notes on things. Just remember, I'm not a financial advisor, but I do advise you to like and subscribe. So here's a press release. It says IQST announces 290 million in 2024 annual revenue forecast. This came out on June 4th, 2024. IQSTEL, a US-based multinational, fully reported and audited publicly listed telecommunications and technology company preparing for a Nasdaq uplisting, today announced increasing its revenue forecast for 2024 to 290 million revenue. The forecast increase is based both on anticipated organic growth and revenue contribution from the recent QXTEL acquisition. So first thing I want to note there is it's talking about how much of this is organic growth and how much is from the acquisition of QXTEL. So if you guys remember, QXTEL is estimated to do a little over $80 million a year. We actually got their Super 8K showing their financials. So remember, take a look back at that. But $80 million a year at close the first day of Q2. So it's only actually adding 60 million this year. So let's just look at that real quick. 290 million is their new forecast. We know 60 of that is from QXTEL, and we know that they did 144.5 last year. So that means $85.5 million in organic growth. So this year, QXTEL adds 60 million, but the organic growth, just cross-selling, just improving sales, is adding $85.5 million. So the vast majority of this growth is still coming from the cross-selling and just business running better. It's not the acquisitions that's growing it. It's the acquisitions, but then it's the cross-selling and growing those subsidiaries after the fact. So really good to see. And it says IQSTEL reported 144.5 million in audited revenue for 2023. The 290 million revenue forecast for 2024 announced today represents a year-to-year revenue increase of more than 100%. And yeah, 100% year-over-year growth. That's their new forecast. So really, really good to see that. I told you guys we'd probably get an increase to the forecast like the first week of June. We had Q1 filing, and then we had preliminary revenue for April and May both, which included QXTEL. They gave them 2 months of QXTEL on the balance sheet so they could come to really see what they were going to do with QXTEL reporting, and that's when we expected an update, and here we are, 100% year-over-year growth, which is pretty wild, guys, for a company this size. It says, at this time, the 290 million 2024 revenue forecast does not include any contribution from the recently announced acquisition of Lynk Telecom, anticipated to close not later than July 1st, 2024. The company may revise its forecast higher following the Lynk Telecom acquisition closing. So again, you guys got to look back at the PR for Lynk Telecom. It said Lynk is expected to add $20 million a year in sales. If they close July 1st, that's the first day of Q3. So they'll be contributing for Q3 and 4, 6 months. That's half the year. So Lynk Telecom should add another $10 million to this year, taking that 290 up to 300 million, which is what we've been saying for the years. They're going to break 300 million, and that's what we're looking at now, guys. Assuming they close Lynk, 300 million plus, because they're going to keep growing. The growth is not showing any signs of slowing down. Based on preliminary accounting, the company realized 54 million in revenue for the combined months of April and May. This represents substantial revenue growth over IQSTEL's 51.4 million in revenue for the first 3 months of this year, reported in a recently published auditor-reviewed Q1 2024 report. So I want to point out on this that they're saying April and May both did 54 million combined. They had already given us April's preliminary revenue of 27 million, so they're consistently doing 27 million a month now. If we look back at what Q1 was doing, it was 51.4 million for the quarter, so about 17 million a month. However, we had some preliminary revenue numbers in there for January, February. They did 51.4 million. We knew they had done 33 million by February. So March, in theory, was about 18.4 million. So April and May doing 27 million. That's an $8.6 million increase month over month. So 8.6 million. That's a big jump from March to April. And what happened in April? They closed QXTEL. So let's look at 8.6 million. If that's what QXTEL added to the balance sheet, 8.6 times 12, that's $103.2 million a year. We don't know if all that growth jumping from March to April with QXTEL, but we do know that they announced QXTEL back in January and they started cross-selling immediately. So I told you guys I expect QXTEL, once they hit the balance sheet, they're already going to be doing more than $80 million a year, and it looks like they are. If that big jump from March to April was all QXTEL, we're looking at QXTEL already being a company doing over $100 million a year because they've been cross-selling since January, and that's 5 months. They were cross-selling for several months before the acquisition actually closed. They told us that they pulled them into their weekly meetings where they talk about just synergies and cross-selling and opportunities. So really, really good to see that big jump in revenue once QXTEL hit the balance sheet, like way above what QXTEL was projected to add. So organic growth driving overall revenue growth. While the revenue from acquisitions is adding to revenue growth, it is important to highlight the organic growth is fueling the more substantial overall growth. Like I said, guys, this new projection, this forecast is showing $85.5 million from growth and $60 million from acquisitions. So it's definitely organic. The cross selling is going well. IQSTEL executed acquisitions in 2022 and 2021 and reported annual revenue growth of approximately 44% each year. In 2023, the company executed no acquisitions and reported revenue growth of approximately 55%, driven completely by organic sales expansion. So what they're telling us there, guys, is that they're not just buying growth. In 21 and 22, they did have acquisitions just like they did this year. QXTEL's adding 60 million to the balance sheet, but 2023 had no acquisitions, and that was one of their strongest years yet. Their growth actually accelerated from 44% to 55% last year when they didn't add any new companies. So organic growth is really the story here, guys. They want to make sure and emphasize that we know they're not just buying growth. So one thing I do want to note on that though is there is always some carryover growth. So if you look at QXTEL and Lynk Telecom, QXTEL is 80 million a year, but they're only contributing 3 quarters out of the year, so that's 60 million instead of 80. Next year, QXTEL will be contributing all 4 quarters. So even if there was no growth, they would add 20 million more dollars to the balance sheet next year because they'll be owned all 4 quarters. And for Lynk Telecom, the same thing. Lynk is being acquired right at the halfway mark of the year. So this year, only half of its revenue will be reported. Next year, all 4 quarters of revenue would be reported. So it would be 20 million instead of 10 million. So looking at both those combined, next year, even without any growth from QXTEL or Lynk Telecom, add another $30 million on top of revenue just from those two contributing the entire year. So plan on next year's growth having an immediate $30 million or more, which means that they're going to do double-digit revenue growth next year. They're already set up for it, and that's before any actual organic growth. So growth is definitely going to continue strong for the foreseeable future. All right. The company's increased organic growth in 2023 demonstrates the effectiveness of our ability to integrate acquired operations. By making acquired businesses part of IQSTEL's overall product portfolio, we are able to drive increased organic growth through cross-selling and collective sales efficiencies. Accordingly, our sales forecast announced today does not just reflect the simple addition of acquired revenue, but the projected organic growth anticipated from the effective integration of acquired operations. Based on our history of successfully integrating previously acquired operations and increasing overall organic growth, we believe our current organic growth projections are sound. And I'm going to say that they're more than sound. So we know that they always underpromise and overdeliver. Let's look at what they're actually on track for with current operations. So we know they did 54 million for April and May. That's 27 million a month. So 9 months of the year from April to December, that would be 243 million, and they did 51.4 in Q1. Right there is 294.4 million. So if they just keep doing exactly what they're doing, 27 million a month like they did in April and May, they should do $294.4 million this year. Obviously, they can add Lynk Telecom to that, throw another 10 million in for half the year. That's 304.4 million is what they're currently on track to do before any additional organic growth. That's well over 100% growth this year, guys. Bottom line growth projections. In addition to the 290 million 2024 revenue forecast, IQSTEL is forecasting 7.5 million in gross profit for 24 compared to 4.6 million reported in 2023. The company reported 1.3 million in gross profit for 24. Management has a positive operating income of 7-digit forecast for 24. So I'm going to tell you guys right now that this 7.5 million in gross profit, they are again under promising so they can over deliver. If you look at what they did last year, if you look at what they did in Q1, you project it out. We can look at the financials of QXTEL and what QXTEL adds alone. We can look at what Lynk might hypothetically add, and they're going to do well over 7.5 million in gross profit. And then they're talking about their operating income of 7 digits. Well, that's $1 million. They're saying it's going to be in the millions. They're not giving us an actual hard number on their forecast because when you're projecting 1 million or 2 or 3 million, it's hard to be that accurate when you're doing hundreds of millions in sales. A very small difference, a 1% difference on 300 million is $3 million change. So I don't expect them to come out and say, hey, we're going to do $2 million net income or 2.5 million or something like that, because it's just too easy to be off by a large percent. On the revenue forecast, though, they can say 290. They're not going to be too crazy there. So we are pleased with the bottom line projections for the current fiscal year, but want to highlight the even larger expectations for the bottom line beyond this fiscal year. The revenue growth from recent acquisitions and the organic revenue growth that will subsequently result from the recent acquisitions will be realized before the downstream bottom line benefits of the increased revenue is fully realized. The operational efficiencies for streamlining multiple operations takes more time to flow to the bottom line than do the benefits of increased revenue. We expect even greater bottom line benefit next year resulting from the revenue growth we achieved this year. So what they're telling us there, guys, is that this new revenue from these acquisitions hits the balance sheet immediately, but you don't see the net income jump up drastically right now this year because, like they just explained in their PR about the Q1 report, Q1 had a lot of expenses tied to the acquisition. They bought QXTEL, and I think it said it was about $600,000 worth of extra expenses to set things up for QXTEL and Lynk Telecom with consultants, lawyer fees, all the things that are involved with just closing an acquisition that big. There's a lot of one-time expenses, and those are on the balance sheet for this year. So that's going to show on the annual report this year. The other thing they're saying is that they're going to continue improving the top line, the revenue, but a lot of things that they're going to also improve on is operating expenses and some of the costs. So they're acquiring QXTEL, and QXTEL has got its own set of operating expenses, their own CEO, CFO, all of these managers, and there's going to be a lot of redundancy in those positions. So they're going to be able to cut some of those expenses out. So QXTEL, what their operating expenses are right now, very well could decrease. And if we look into that a little bit further, we can see in previous press releases, We talked about this in the interview with Landro too. So here's their press release from last year. It says June 7th, 2023. IQSTEL announced the company has initiated the consolidation of the telecommunication subsidiaries that make up the company's telecom division. The first consolidation step is the operational combination of Etelix and Swisslink, which is alone anticipated to improve the bottom line by $500,000. The earnings improvements are expected to begin taking effect in Q3 this year. IQSTEL recently increased its 23 forecast from 105 million to 120 million. So, first of all, you guys remember that a year ago they were projecting 105 million. They upped it to 120 million. That was literally last year. Now they're projecting 290 million. But anyways, the point of this was that they are consolidating their telecom operations. On the operational level. So we talked about that in the interview with Leandro and Alvaro, the CEO and CFO, and I talked to them a lot about that offline. What they're doing is bringing all of their telecom subsidiaries together to operate on the same platform and integrate all of them. It's going to make things more streamlined, more smooth, more efficient. So if a company like Swisslink wants to offer a service that Etelix provides, they don't have to get a hold of each other and figure out how to do it. It's all going to be on the same platform. If Etelix offers a service, it's going to be in the same platform, and Swisslink can immediately just access that and provide that service. And they're all going to be operating on the same platform, allowing them to streamline things like invoicing and issuing POs and things like that. So I've worked a lot with that at work and multiple locations. I've been at several Fortune 500 companies, guys, and I've been through some of these consolidations where they get everybody operating on the same platform. When you have 18 different production facilities and they're all running on different platforms, it causes a ton of issues. And so you get them all operating on the same programming. When you buy a new company, bring a new facility online, whatever it is, you get them operating on the same programs as well, because it streamlines things. It gets everybody operating on the same level. Everything is right there. It's easier. You're not fighting with my system issues, POs and work orders through this platform, and you use a different platform altogether and they don't communicate, and it's a ton of man hours and headache to do anything between different plants. So that's what they're doing is bringing them together. It's reducing costs, it's streamlining operations, it's going to get all the telecom subsidiaries operating as one big company. Now Alvaro did explain though that they're going to operate as one company, but they will remain separate entities. So we'll still see them reporting individually on the balance sheet. And the primary reason for that, Alvaro explained, was because there are certain licenses and things in certain countries. So they've got to keep them separate. Even if they wanted to consolidate them completely, they're going to stay separate for licensing reasons. So being able to operate in telecommunications somewhere like Latin America, somewhere like Africa, wherever it is, you've got to have authorization to do that, and individual subsidiaries have certain licenses in certain areas. So but that consolidation, I asked Leo about it in the interview, and he said him and Alvaro both confirmed Etelix and Swisslink did consolidate. It went very smooth, and they had moved on and were in the process of consolidating SmartBiz. And after SmartBiz, they're going to move right into the next one. So I would imagine that QXTEL is on the list, and they will consolidate QXTEL as well, and that's going to help bring down some of those operating expenses. And you guys might have seen, I shared one of my charts on that on message boards, I think yesterday. And I track all this stuff, guys. You guys can see the operating expenses as a percent of revenue. 2020 operating expenses were over 9% of total sales. 2021, it was down to 7%. 2022, it was about 5%. 2023, it was under 3.5%. 2024, it's going to be even lower. So they're growing sales, and it's not growing their expenses at nearly the same rate. They can double their revenue without doubling their expenses. So the higher volume they do, the higher their margins are going to go. They're gonna cross into profitability, because at this level of volume, it's more than enough to offset their operating expenses. And bringing on these new companies of QXTEL and Lynk Telecom is going to come on with their own operating expenses as well. but these synergies between the subsidiaries are going to bring those operating expenses down. So they're continuing to improve the bottom line. And like I said, this level of volume, it's pushing them into profitability, and they're still focused on growth. They're not even driving real hard to hit high end top of industry average margins. They're still focused on growth. They're growing over 10 times the industry average this year. So it's really impressive to see them keep up that level of growth and be able to grow 10 times what other companies in this industry are growing and still cross over to profitability at the same time. I just really can't emphasize how big of a deal that is. So back to the PR, it says Mr. Iglesias commented, the company is experiencing exponential revenue growth this year. We are literally skyrocketing in 2024. We are well on track to more than double the company's revenue in 2024. Following a recent planning session in Washington at the International Telecom Week conference, we believe the company is on the path to becoming a telecommunications powerhouse. Our exceptional recent performance is coinciding with our home stretch push to finalize a Nasdaq uplisting. So the International Telecoms Week, I was there for that. You guys have probably seen the video where I interviewed the CEO and CFO. If you guys haven't seen it, check it out. They shared a lot of good information, but I spent a lot of time there talking with them, and the whole board of directors were there. We had a really good time, a lot of good conversation. I learned a lot more about the company. But the big thing about this International Telecoms Week is that all of the subsidiaries were there, and they had a full company-wide meeting with people leading every subsidiary, all right there in DC, which I'm sure doesn't happen that often. They're all over the world. This is a worldwide company, and so they took advantage of that opportunity, brought all the subsidiaries to International Telecoms Week, and they got together and had a planning session and talked about the company's future and the direction that they're going. So he's basically telling us, like, hey, we got together, we've got everybody aligned here, we are all on the same path, we have the same vision, we have the same goal. And just like he said when they were trying to close the QXTEL acquisition, the deciding factor in that was IQSTEL's vision. QXTEL and IQSTEL share the same vision. They want to become a top 10 telecommunications provider in the world, and that's what they're going towards, guys. And then it says here the home stretch push to finalize a Nasdaq uplisting. So they've been talking about Nasdaq, and it has been a while, but guys, look at what they've accomplished. They meet all of the criteria except for share price. They have the independent board of directors, they have the compensation committee, they're third party audited, they're current on all filings. If you look through the Nasdaq actual website on what the listing requirements are, they appear to meet every single requirement except the share price, and the minimum share price requirement is $2. So the stock market does what the stock market does. It's out of their control whether or not the share price reacts to these acquisitions and doubling your revenue and improving your bottom line. The market reacts or it doesn't. They can't do a whole lot about that, but everything within their control they've done. So this year, with these improving margins, with the bottom line increasing, they should turn into profitability. Next year is going to be even higher profits. It seems like that's the thing the market has been waiting for. They've always had growth, but they have not crossed over to an annual profit yet. Last year they turned profitable in Q3 and Q4, but for the year, because of Q1 and 2, they still had a $200,000 loss. So net income improved by over $5 million last year, but it was still just shy of a profitable year. So 2024 should, in theory, we hope, be their first full year showing a positive net income. So that's what they're talking about, guys, is 2024. Everything is changing because the company is over doubling in size and they're going to be profitable for the year. So the market, who knows if it's going to react or not, but I'm hopeful that it will. I've said for years now that 2024, 2025 are my timeline. That's when the financials make sense. It's when the valuations are there. I still believe that's the timeline. 2024 financials are really going to push things up over the top. And going into 2025, looking at those projections and what they should be doing on the top and bottom line, I think $2 is going to be more than fair for 2025. So I'm pretty confident myself that we will see an uplisting in the near future. I doubt it happens in 2024. I think that we need to get the 2024 audited filing, which will not come until April. But once we see 2024's actual filing with the full year's audited financials, and we're seeing the 2025 projections, that's when I really anticipate that the stock should be worth over $2, assuming the company's financials continue to improve the way they have been. It's not a financial price projection because, I'm not an analyst or financial advisor. I'm not advising anybody to buy the stock. I'm just telling you what I see the fundamental value as, and we'll see if the market reacts or not. I was talking with Shane after I recorded this video, and I wanted to come back and add, we've talked about this in message boards before, guys, that profits are the key to it. Even if the market does not react, once they show some profits, it's going to open the door for some of those options that haven't been available to them before. Some of the things you guys have been asking for like share buyback, special dividends, some things like that, they can't do that when they don't have the profits for it. Now, Landry was told us that he's going to continue driving the business growth and reinvesting into the business itself. But so far, things like a buyback haven't even been an option for him. If they show profitability in 2024 and continue improving and have profits in 25, 2026, if this share price does not react, they will actually at that point have the option of taking some of those measures. So the things you guys have been asking for are going to be an option on the table soon. If it's still a 30-cent share price and they're showing, $3-5 million in profit a year, it's going to become a pretty good idea to buy back some of those shares. So a little bit of time, guys. That's what I'm looking at. We are at that pinnacle point where they're going to turn profitable, and things like that are going to be options where they can command a higher share price and have the ability to actually push it up by buying back the float. So I expect that we're going to see a big change as they cross over into profitability this year going into next year. I'm not a financial advisor, so that's just my personal opinion on it. Like I said, my videos are for entertainment purposes only, but if you guys like them and you want to see more, subscribe to the channel, and I'll see if I can get another interview scheduled here around the time Lynk Telecom closes. That'd be a pretty awesome time to get with management again. So thanks, guys. I hope you enjoyed the video, and I'll see you on the message boards.